So, you thinking about moving to Orange Beach, Alabama? Well, today we are at the Pier House in Orange Beach. You can see it right there behind me. The Pier House is a cool little restaurant. We are actually here today to talk to a lending expert. We're going to talk to Sherry Weaver. She is an absolute expert when it comes to condo lending. And if you remember, we did a video earlier telling you about condo lending being different from buying a house. So today we're going to cover that. We're going to tell you all the ins and outs of condo lending, what you should and shouldn't do, and just everything that you can expect. So let's get to it. Hey guys, if this is your first time to the channel, make sure you hit the subscribe button, hit the like button, and ring the little bell for notifications so you can be one of the first ones notified about the current market condition in the Orange Beach area and Gulf Shores and all the surrounding areas. My name is Andy Hollis, along with my partner Aileen Fountain and our entire team. We do these videos every single week just to be informative, just to kind of let you know what life at the beach is like, So anyway, whether it's 9 days or 90 days until you're thinking about making your move, please don't hesitate to give us a call, pick up the phone, send us a text, shoot us an email, set up a Zoom call. We'd love to talk to you face to face. We're not scared of you. We get phone calls, texts, emails, things like that from people just like you every single day, and we absolutely love it. I mean, we just love it. So don't be scared to pick up the phone and call us. We'd love to help you make a smooth move to our little slice of paradise. So as we mentioned, today we're going to be talking to Sherry Weaver. She is with FirstBank. And she is an expert in condo lending, probably an expert in every kind of lending, but mainly condo lending. And that's what we're here to talk about today. So let's get to the interview.
Hello, everybody. I see some familiar faces, but I see some faces that I haven't met before. I'm Sherry Weaver with FirstBank Mortgage. This is Minnie Campbell, and we have teamed up to tag team on loans. And I have been in the business since 1987. I moved back here in 94 and started lending on condos since then, back before I needed hair color. So a lot of experience in condo lending. And our goal today is to help you grasp what's changing in condo lending so that it will empower you to do maybe some different strategies with your business as it relates to condos. So let me give you a little bit of history of condo lending. How many of you have had some disastrous condo transactions? Okay, yes. And normally, as Aileen and I talked about that this morning, there's usually because there's been an out-of-town lender involved. Not always, but usually because there's been an out-of-town lender involved. And the reason for that is condo lending is so specialized that if you're not from this area and you don't do condos every day, as a loan officer, you don't even know what you don't know. So that's the problem with, using out-of-town lenders for condo financing. And just to give you a little bit of history, the condo lending has always been fraught with, potholes. But in 2018, I went to a Fannie Mae boot camp. It was like the best day of my mortgage career because they changed everything. And they said, you don't have to worry about a desk in the lobby anymore. You don't have to worry about occupancy. All we need to know is that the renting isn't mandatory and there's no rental pooling. So I called my boss, Karen, and I told her everything that was changing. And she said, did you oversleep at the condo, at the hotel and you're dreaming all this up? I said, no, this is fantastic. It's going to be so easy to do condo loans now. And it was for 2 years. It was the best 2 years. But in October of 2020, Fannie Mae sent out this little thing that says, we no longer want to do condominiums of a transient nature. So we look up the definition of transient in Webster's, and we still didn't get it, so we got on a phone call with Fannie and said, what exactly do you mean by transient nature? And the answer was, we don't want to do any condo loans where there is less than 25% primary residences. And we got the deer in the headlights look, because in our area, there's very few condos that are 25% primary residences. So we scrambled, as many other lenders in our area did. What are we going to do? And so our first strategy was, well, let's not send any to Fannie. Let's see what Freddie says. And so we sent some to Freddie. And as with many other lenders, because I've talked to some of the lenders in our area, Freddie made us buy some back. So it was a guessing game. How do we know that a condo is going to go through until we send one, and then we kind of go and wait for the mail to see if it's going to come back? That all changed here very recently, and I want to give you the jargon and the lingo of these changes that better equip you to be out there selling condos with confidence. Okay, so here's what changed. Freddie Mac, not Fannie, Freddie Mac came up with a system called Condo Project Advisor. So I want you to get these, this is game changing. So I want you to get this lingo down. It's a Condo Project Advisor on their website. Okay, as lenders, we are the ones that have access to it. I'm sorry, but they don't let general public or realtors have access to it. It's lenders that have access to it. But it's called a Condo Project Advisor, and it assesses, in their opinion, whether a project is a condotel or not. And what is a condotel? Somebody tell me, what's a condotel?
All suites. Phoenix all suites.
Perfect example of one. Perfect example of one.
Can only stay 2 weeks out of the year.
And they have to pool the rents.
Yes.
And they have to rent it.
They have. Yes.
Okay. So.
With Brett Roberts.
Right. Oh, I didn't realize that.
Yeah.
Okay. So this Condo Project Advisor allows us to go into the system and request a PAR, P-A-R, Project Assessment Request. So that's another bit of lingo I want you to highlight, star, because when you're talking to a lender, if you're not talking to me and you're talking to another lender, especially if it's an out-of-state lender, out-of-area lender, you want to know, did you run a project assessment request on this? So this allows us to enter the address and name of a condo, and Freddie Mac tells us, next page. Okay, so this one tells us if it is on Freddie Mac's green list. If it's on the green list, that means that they have already investigated it, and we were blown away because when they brought this out, it means they did this nationwide. Can you imagine how many condo projects there are and what kind of staff it took to do that? But they examined every condominium and they put it in one of these 3 categories. The green is, regardless of whether there's a desk in the lobby. How many of you remember, oh my gosh, there's a desk in the lobby? We can't do it. Every Phoenix, right. Okay. Regardless of if there's a desk in the lobby or how many nights, remember how it could only be rented 3 nights a week, all of that. Regardless of how many nights it's rented, if it is on Freddie Mac's green list, we can lend there. Okay? And that includes Phoenix buildings, a lot of the Phoenix buildings. If it is on the yellow list, it's a caution, meaning Freddie Mac says you can lend there, but you're on your own. It will tell us why they have it in the yellow, but it is vague enough that we're not really sure. Okay? So it would be a case-by-case basis as to whether we could lend there or not. The third category, incomplete. Our underwriter, who underwrites condo projects for us, really a great gal with a brain that makes sense, a thought process that makes sense when she evaluates condos. She said, basically, this is Freddie Mac's way of saying, we don't want to do that loan there, period. We're not even going to tell you why. We just don't want to. We don't want that loan. So if it comes back as an incomplete, you have to switch gears and find a lender that will do this loan on their portfolio program. Okay, in-house. Portfolio means nothing more than it's an in-house loan, stays on their shelf, and does not have to go by Fannie and Freddie guidelines. Okay, so next page. This is what my page looks like. And every time I run one of these loans through the condo, it gives me the whole list of, run it through the PAR, I'm sorry, use my lingo here that we're learning. Whenever I use my PAR, it adds to the list of every time I check one, I can go back and I don't have to recheck if I've forgotten what the results were. It's on my page. Okay? So this is game changing because it takes away the piece of the guesswork of, will Fannie or Freddie call this a condo tel or will they not? You know, it's right here. So next, do we still need a condo questionnaire? We asked that question because we thought, oh man, could this do away with half the questions on the condo questionnaire? No such luck. Thank you. There's a man who knows how this works. So no such luck. So we still have to do a condo questionnaire. But if you've already established that it's not a condo tel, what's there left to verify? Well, the first thing is there any litigation in the project? And if there is, we have to know all about it. What's it for? Is it for structural? Is it for a slip and fall? And I can tell you just very simply, if it's for a structural issue that has not been repaired, we very likely cannot make a loan there. But if the association has made the repairs and they're just going after a contractor for reimbursement, we can deal with that. We just have to prove that the repairs have been made. They have to make statements or, you know, provide documentation that the repairs have been made. What else is left to verify? Since we went through a major minor hurricane a couple of years ago, we have to let Freddie know whether the repairs that were initiated have been completed yet. Okay? And are they of a structural nature or a cosmetic nature? Special assessments. We have to know what they're for. And you may or may not know this, but let's say that every unit now has a $1,000 special assessment. We have to divide that number by 12 and add it to the buyer's debt ratio. Okay. The budget, what's left to verify? If they are putting down 25%, at this point, we do not have to show the budget. And that's whether they're buying investment properties or second homes. We don't have to show the budget. Why is that important? Anybody know why that's important to show the budget? We are looking at the reserves.
Yeah, I was going to say,
Yep.
if
Yep.
there's less than 10%
Right.
reserves, they can't loan.
Right. We can't lend there. Now, we've heard a rumor that Freddie Mac or Fannie Mae or both are going to do away with that from now on, you'll have to show the budget every time. But so far, they haven't done it. So get those condo loans in now. So that's what we're looking for on the budget is that association putting away a 10% line item for reserves? And that may sound easy, and each one of them has a different format of how they do their budget. So you're looking at the budget, scratching your head going, okay, where are the reserves? Oh, you know, so it's not that easy to figure out sometimes what they're doing. I think one of the budgets that we just looked at said transfer fee. And since it was 10% of the association dues, I figured, okay, that probably means that was their reserves. But we had to make a phone call and make sure that that's what it was. So that's what I'm saying is just 10% down, you know, should be a piece of cake. Oh, there it is. Not always. So that's why another reason you need a local lender who understands what's going on and has the communication skills to get back in touch with that association, not make them mad, or the management company, and get the information that you need. Next thing we need is the master insurance policies. That's standard. That's been going on for a long time. We have to take a look at the insurance to make sure the coverages are adequate. Okay, and are there any owners 60 days past due or not? I put a separate page in here on critical repairs because this is a big deal right now. A lot of projects are still suing the insurance companies to get their funds to make the repairs. Some of them had enough reserves to go ahead and make the repairs and then sue the insurance company and get reimbursed. But some projects down here did not have that kind of reserves. And so the project can be sort of in limbo if the repairs are not done and the money's not there to make them. The first question says, has there been an inspection done? The whole real estate community, I shouldn't say that, make that generalization, blew up when that first came out and said, now they're going to require we go get inspections. No, that's not what the requirement is. The requirement, or the question is, has there been one done? Has there ever been one done? And if so, what were the results? And that's what the association has to figure out. But because this whole new requirement was associated with the collapse of the tower in Miami, now management companies and some associations are refusing to fill that out because they don't want the liability. Well, that kind of makes it hard for us to get the loan through because we've got to have the questionnaire filled out. But, you know, it's not asking every association to go get an inspection. It just wants to know if there is one. The other piece of that questionnaire is, do you have a plan for deferred maintenance? Is there a plan in place by the association to make repairs as things are needed? We had a condo questionnaire came back and said, nope, we don't have a plan. That's not impressive. We don't necessarily have to know what the plan is, but we have to know that there is one. I want to talk about how we can work together to get a condo project through, because we're going to need to do that more than we ever have had to before. So the first one, whether you are the listing agent or the selling agent, but especially if you're a listing agent on a condo, get the most recent budget. Yes, as a lender, we have to get it a lot of times, but you can get it faster from your seller. Your seller had to have been sent a copy. Get it. Send it to us. Let's look it over before you're under contract. Double check the info for the management company. A lot of times people change. They decided not to go with St. John's Business anymore, and they're going to go with Coastline. You know, but nobody sends out a notification to let us know that. So if you know who the management company is, whether you're the listing agent or the selling agent, tell us so that we don't waste time, spin our wheels trying to find out who the new one is, because a lot of times St. John's not going to tell you.
Well, they're also not going to call you back either. So
Yeah, there you go. There you go.
physically go in, you get
Right. And that's another reason for dealing with local lenders. I have to drive over to St. John's after this meeting, as a matter of fact. We're here to go make that face-to-face call or meeting or whatever. This you need to know for your customers anyway, and I'm sure you're already on top of it. But if there is a special assessment, we need to know about it well before closing, because we have to know what it's for and who's paying it. If the buyer's gonna, if it's a $10,000 special assessment, and the buyers and the sellers have decided to split it, we need to know that prior to the day before closing, when the title company tells us this, because we have to deduct that $5,000 from the buyer's cash to close and make sure that he has enough cash to close for his down payment, his closing costs, and that $5,000 special assessment. So we need to know if there's a special assessment as early as we can, and we need to know what it's for. And again, it goes back to if it's for repairs, have they already been made, or are they still outstanding? Litigation. It's really important to know, again, early as possible, is there any litigation in that project? Sometimes we don't know that until the condo questionnaire comes back. And so that could be late in the game, especially if it's, you know who management company, and they take 3 weeks to get it to us. You know, so if you know it as a listing agent or a selling agent, tell us and let us find out where we can get a copy of the complaint so that we can figure out what it's about and what are the financial ramifications of it. I can tell you that on a slip and fall case, We typically don't have a lot of problems with those because the management company has the liability insurance that usually covers a claim. What sometimes we have difficulty with is the attorney telling us an approximate amount of the claim because they don't want to, speak before everything's done. But the sooner we know about the litigation, what it's about, the better, and a copy of the complaint. If at all possible, I know, the late night TV real estate gurus, I don't know if they're still doing this, but they used to say, buy this property with no money down. Exactly. If you can, encourage 25% down. And here's one of the main reasons. The rate is better. It seems like Fannie and Freddie throw us a curveball every year. And last year's was that they were going to increase the cost of second home interest rates. They now have the second home interest rate and the investment property interest rate relatively the same. So you remember when we used to go, it's a second home.
Yes.
Yeah, we don't have to do that. I don't have to do that anymore. There's an 1/8% difference in the rate. If they're going to rent it every single day, call it investment property. Be done with it. I can tell you if they put down 10% or 20%, the rate is astronomical. The rate could be close to 8% and 3 or 4 points. 3 or 4 points.
On 10% now?
Yeah. If they can put down 25%, we're still getting back to the range of maybe 7 1/8% and maybe 1 point, or on a good day, maybe we can get it down to a 1/2 point or something like that, something more reasonable. But if they don't put down 25%, I can't help them on the rate. I guess it's more on our minds because if you were in a different part of the country, maybe critical repairs isn't that big a deal. But with us, in our area, there are still projects making Sally repairs. So far, we've been skating around the marina issue. So far, we've been able to, because it's not a health and safety issue. I guess unless you walk out there and there's a board missing, but so far we've not run into problems with the marina. The underwriter's looking at anything that's of a structural nature. Parking lot wouldn't qualify because I know we one time had a issue with Sanibel resurfacing their parking lot, and I got that loan from another lender because they wouldn't do it. But a parking lot like a marina doesn't really speak to the safety and soundness or habitability of it. Now, most of the lenders down here are going to know, we've all been through the same thing, been clobbered by Fannie, and so we're all, but your out-of-town lender.
It's going to try to push it through Fannie.
Listen.
Yeah, because Fannie typically is priced infinitely smaller, better than Freddie. And so an out-of-town lender might go that direction, not understanding that if it's a condo, they better go through Freddie. Because if they don't do condos every day, fall of every year, every association changes their budget. So what we thought, and that's why we don't publish a list anymore of ones that we've approved. We keep it internally, but we don't publish that list because, boom, we get a new budget. It goes, uh-oh, they dropped their reserves. Now we can't lend there. So the information is only as accurate as the new information that they send to you. That I care about my clients just as much as you do, and I want to know why they don't. I don't need it for the underwriter. I don't need it for myself. But my customer, they become friends and they become, people I want to take care of. And so I would like to know why not. Now, this happened to me years and years and years ago over at the Lighthouse. Their 10% budget disappeared one year. I mean, 0 for reserves. I'm like, how can I lend there now? I called them up and they said, oh, well, we just won an $8 million lawsuit, so we decided we didn't have to do any this year. I said, that's great. Let me put that in a letter to the underwriter. We're good. So just, being able to tell the customer. And if I come across something that, is possibly a deal killer, I'm going to call the realtor first, give you a heads up. Hey, this is what's going on here. I need to tell the customer, but I don't want you to get blindsided by what I'm about to tell them. Well, great. Thank you for having us.
Okay, guys, so that's going to about do it for our video here today. Hope you enjoyed the video. If you see something that you like in this video, you want some more information, you want some information about buying or selling a condo, please give us a call, shoot us a text, send us an email, set up a Zoom call. We'd love to help you make a smooth move to our little slice of paradise. And again, if you live here and you want to sell your house, we do that too. So don't hesitate to pick up the phone and call us. Until next time, hope to see you around town.